Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency. So you could see that, well, actually after the major events of this week, market has turned to some wobbling action around the support area. So that's why we said yesterday that, well, despite that, overall context remains bearish, and this week probably, well, at least our targets have been completed. And today's Friday, as market could, well, decrease some activity close to the weekend. The actually last important event that we still have on the table is the coming inflation report on the European Union. Here's might be some volatility, some spikes, and as we said yesterday as well, that maybe on some spike market could finally touch the 108.45, 108.46 extension target that has not been reached yet. By the overall performance that you see today and tomorrow and yesterday, actually, you would understand why we said that it makes sense to think about booking the result, because markets becoming choppy, and well, definitely it needs some time after the significant downward action. Besides, if you take a look at performance of the treasury yields today, this market also has stopped slightly slow. So overall upward action on 10-year yields is also now take the pause. This actually makes impact on other assets as well, including the euro currency and gold market in particular. So on the follow time frame chart, that's an extension that I'm talking about. Here we have some divergence. If you plot the MACD, you could see when that minor grabber had been formed here. I don't think that's a really reliable pattern. Besides, as we agreed previously, we are not considering taking any long position here, and we're just waiting and watching for possible upward bounces as a chances to take the short position at a better price. So in the current moment, of course, if it's not forbidden, if you would like to, you could try to take the scalp long position if you trade on the hourly charts and below. But for us, since we're mostly considering daily chart, for our time frame, we have the bearish context, and in this point, despite the grabber, we are not considering taking the new longs position. So if you still hold the bearish positions, control the risk, and if market still somehow will touch the 108.45 area on report on the CPI numbers, I suggest that it makes sense to close the position, because it's a weekend. Right now, lots of news coming on the weekend, especially political news, economical news, and we could wake up in the morning on Monday and it's an absolutely different market. So that's why I prefer to not keep the positions for the weekends. So, but that's very personal. You guys better to know what to do with your own positions. I'm just sharing with you some thoughts on concerning the current overall situation that we have on the market. So on the lower time frame, on the hourly chart, you could see that market also has touched the butterfly target that we have specified after the pullback that we have discussed here. As we said, that was our first call for position closing. You can see was more or less significant pullback here. So all in all, you can see that mostly the nearest standing targets that we discussed have been touched. Let's see what will happen on the CPI report, and if we will get some bounce, we probably return back to the idea of the taking new short position, because currently fundamentally the situation in the United States and around the United States dollar with the rising interest rates seems, well, stronger than the situation in the European Union, especially if today we will get some weaker than expected CPI numbers. So let's see.